Fee. Thanks for those who are attending now. I see the numbers ticking up as we start. Welcome to those who are just joining. Today, our webinar is All Hands on Deck, How to Educate and Motivate Your Internal Stakeholders on Energy Efficiency. My name is Craig Hageland. I work at the EPA on the Energy Star Buildings program. I lead our work across commercial and multifamily sectors. We've had a number of webinars in the past where we've brought on partners to talk about engagement around energy efficiency, specifics in terms of tenants and other audiences. I think today we're taking a little bit step back and looking at it more holistically, how programs are sort of built, what type of communications and processes and strategies lead successful organizations like the two I have on here to motivate companies to continue to pursue energy efficiency, energy management, and decarbonization measures. We will sort of quite literally break down this topic here. We will look at sort of education and communications. We will look at motivations. We will sort of dissect who are internal stakeholders, what do they represent, and what types of things work. I've gotten many questions in the past that range from sort of, we are entering into the decarbonization world. How should we be kind of pursuing goals there internally, from folks just starting up where they need to convince stakeholders to be involved. They need to talk to upper management. They need to figure out what the right sort of mechanisms are to motivate. So we will dig into all of this over the course of the next 50 minutes or so and have a great discussion. Next slide, please. So this session is going to be very light on slides. It's going to be mostly a panelist discussion. We have a number of topics that we'll have prepared there. Of course, you are welcome to submit questions as you come up with them into the chat. We will certainly have some time at the end to go through them. I already have a few questions that have been submitted ahead of time. So we're going to base this mostly on a good conversation with everyone and then close it at the end. Next slide, please. So without further ado, I'd like to introduce our panelists. We have Maddie O'Donnell, who's a senior ESG analyst with Principal Real Estate Investors, and Alex Gulagachi, who's the director of engineering with RXR Realty. I'd like to start off, just both of you give sort of a brief introduction of yourself and your role with your organizations, and then we'll dive a little bit more into the weeds on strategy. So Maddie, why don't you go first and introduce yourself?
Thanks, Craig. Yeah, I'm Madeline O'Donnell. I'm a senior ESG analyst for Principal Real Estate. In my role, I am responsible for helping set our sustainability strategy, engaging with internal and external stakeholders, monitoring property and portfolio performance, and managing projects, all to support progress towards our sustainability goals. A little bit about Principal. Principal Real Estate is the dedicated commercial real estate investment group within Principal Asset Management in our broader Principal Financial Group. Principal has been investing in real estate since the 1980s and today has over 300 investment professionals covering public and private debt and equity real estate investing. I primarily work with our private teams for sustainability investing, and primarily within private equity, where we invest in industrial, residential, retail, office, data center, and some niche properties in the US, Canada, and Europe. Our sustainability platform, which is shown here, is called the Pillars of Responsible Property Investing. This platform consists of standards and resources for incorporating sustainability best practices throughout the investment lifecycle, and applies to our open-end discretionary and private equity funds and other funds that opt in. So the graphic shows the PRPI platform. It's based on a foundation of strong governance, guiding policies, reporting practices, and research. And then the cornerstones in the middle there represent how we apply best practices throughout the life cycle of an investment, with the 5 pillars guiding our investment management practices. So those are environmental performance, occupant experience, community impact, climate resilience, and managerial excellence. And the other thing I wanted to just share is that as part of the platform, our participating funds are targeting 40% reduction in emissions, 20% reduction in energy and water use intensity, 20% waste diversion from landfill, 50% data coverage, 20% renewable energy, and at least 50% of properties with a green building certification, all of those by 2035 over a 2019 baseline, and then net zero by 2050 And of course, we'd love to achieve all of those sooner if possible.
Great, thanks, Maddie. Alex, why don't you give us a little bit of a background about yourself and RXR?
Sounds good. Thank you, Craig. My name is Alex Gulagacci. I'm the head of engineering at RXR. RXR is an owner, developer, operator with over 33 million square feet of properties, ranging from commercial real estate through multifamily residential, industrial, et cetera, nationally. My role within the organization is basically heading up all engineering activities for both our operating assets as well as our new developments and pending developments and any potential property acquisition processes that the organization is involved in. So any of the environmental efficiency measures that we might implement in carbon neutrality planning within the portfolio is being basically put together and articulated and implemented by myself and my team.
Great, thanks so much. Next slide, please. So, we'd like to get into a little bit of discussion. Obviously, both your organizations are heavily involved with Energy Star and have been doing this for a number of years, and both of you sort of sit at key internal spots in your organization where you probably interact with a lot of people. So I'm excited to get into your experience and what your organizations have done. But I think first, to sort of set the stage, let's talk a little bit about organizations from either when they started, if you have all the history, or at least your beginnings with your firms. If you could each sort of describe where you started from, the beginnings of your energy management, sustainability programs, what were sort of the primary drivers to look into this, who were the sort of initial champions to moving forward. I'd love to hear a little bit about the beginnings. Maddie, let's go back to you and learn a little bit more.
For sure. Thanks, Craig. So Principal Real Estate Sustainability Initiative began around 2007. At that time, individuals across the organization were monitoring trends in sustainability, and they were seeing a lot of opportunity to improve our property value through efficiency improvements and competitive differentiation offered by things like LEED certification. So some research referenced in some of those early internal papers and presentations around 2007 were showing a lot of benefits to green investing. A couple interesting ones I saw, there were some stats about enhanced productivity, with one of the studies showing productivity improvements across a variety of types of green buildings. So they referenced hospitals having a 2.5-day earlier discharge, schools showing 20% better test performance, increased retail sales per square foot, increased production at factories, and anywhere from 2 to 18% productivity increase at offices. There's also a lot of operational efficiencies they were seeing. There's a study of 168 LEED office buildings that was projecting an average annual energy savings of 30 to 55%, and annual water savings of 30 to 34%, depending on the level of LEED certification. And then a study on the extra costs associated with building to LEED certification standards. It showed just 0 to 1% extra for the LEED certified or LEED silver levels, 3 to 4% for LEED gold, and 5 to 7% for LEED platinum. So I thought that was really interesting to see some of those early benefits and how a lot of the stats are pretty similar still today. And also interesting to see that inclusion of the projected additional costs being sort of part of the discussion even back in the beginning. The other kind of interesting thing was just the benefits being summarized in alignment with the triple bottom line. Green buildings benefiting people through higher employee satisfaction and reduced absenteeism, the planet by reducing emissions and water use, having cleaner materials, and then improving profit through increased building occupancy, lower operational costs, increased asset value, higher rents, improved productivity. So again, a lot of the same story we're seeing today. But given all those kind of risks and then the opportunities to mitigate those, Principal created a green working group, which was comprised of champions across the organization, including the director of operations, who now also leads our sustainability team, engineers and architects, asset managers, and individuals from our research team. And this group has evolved and expanded over the years, but still remains a key component to driving our sustainability performance. Two kind of key initiatives in those early days One was creating our first sustainability program, which was the precursor to the Pillars of Responsible Property Investing, which you saw just previously. Originally, it was created to provide efficiency best practices for office buildings, but then over the years has been expanded to include retail and industrial, as well as multifamily. And then the other key initiative in the early days was the launch of our first sustainable property fund, which developed and renovated buildings to LEED standards. Assets in that fund performed really well as LEED offers a strong set of sustainability guidelines and served as a really big competitive differentiator, especially in those early days. Just two kind of interesting case studies from that. One of the fund's multifamily developments located in Denver had LEED Gold certification. That property leased up well ahead of the pro forma timeline and at rates at or near the top of the market. 70% of those residents in that first round cited sustainability as a major factor in their decision to lease at the property, and the property was sold in 2011 at a record high rate per unit for the market. And then similarly, one of the fund's industrial developments in Los Angeles had a LEED Gold certification. The team received multiple unsolicited offers to purchase that and ultimately sold the building vacant at a price higher than the pro forma stabilized value. So really, all those early wins combined with the increasing investor demand for sustainable real estate investment funds were a huge benefit when it came to incorporating sustainability within our organization ever since those early days.
Great. Yeah. Thanks for all that detail. So if I heard, everything correctly, it sounded like most of the motivations came from signals across the market as you were doing sort of business. You noticed certain things, you started to take action, and then the results sort of proved from themselves over the year, which allowed you to sort of expand and work across that. So sort of, paying attention to what was going on and reacting. So Alex, with RXR, did you have a similar sort of experience? Was it sort of more of a organic development? Did you have different sort of champions or drivers? Give us a little bit of context of sort of where RXR started and where your experience was.
Yeah. So at least based on my engagement as I've onboarded with my role at RXR, I've noticed that RXR has always had a substantial awareness and propensity towards a lot of the sustainability programming and energy management programming throughout their portfolio. I will say that as sort of what we would consider sort of the post-COVID world, and sort of the market evolving towards that post-COVID world, I've noticed sort of an emphasis of really getting an internal grasp on existing environments, whether it be occupancy, which ultimately might tie back to factors such as indoor air quality, identifying sort of potential measures and programming that ties back to what we would ultimately consider the new normal, and what those new sort of strategies look like throughout both on the property level as well as the portfolio level, and incorporating a lot of those efficient integrations and implementations of these strategies accordingly. From a champion perspective, there's a number of different champions within the organization. The RXR has an ESG committee that's comprised of a number of individuals spanning from multiple verticals. So, integration and awareness of some of the programming and some of the potential strategies and policies and procedures that are being developed and sort of implemented throughout the portfolio tends to have an awareness holistically, not only within the individual verticals, but all the way spanning up to the C-suite. So that it seems like it's been somewhat at the forefront of a lot of the strategic sort of analyses that's being done within the firm. But I think over the last few years, you've seen a substantial increase on sort of the data-driven approach to try to get to our corporate goals of carbon neutrality by 2035 and net zero of 2050.
Great, thanks. So, I think what's interesting, both of you are at organizations that it seems like either there's sort of a long history going back over a decade, where signals in the market created a program or just sort of a natural sort of support for it. The reality is there always has to be a business case there. At the EPA, we're even aware that it's not all just loving the environment. There's a lot of different motivators out there, but specifically when you start looking at why senior management continues to invest in this stuff, there usually is some underpinnings, either financially or the way organizations are structured, which sort of continue to enforce investment of this. So I'd like to talk a little bit specifically about the business case. And Alex, why don't we continue with you? Did you have any, specific experience with messaging resonating with decision makers, how the business case was brought to senior management to kind of continue to grow? Wondering your thoughts on that in terms of pursuing that.
Apologies. I wouldn't necessarily say that there was a particular distinct messaging that was ultimately a catalyst. I will say that at least with RXR, and one of their prime core ethoses, doing good, it means doing better, and basically, acting like an owner, and a lot of sort of the cultural, at least philosophies within the organization sort of keeps a lot of these initiatives and programming as a forefront, right? Not to say that there doesn't have to be business justifications and unique business cases that need to be incorporated in order to engage in these particular programmings and models. But I believe the messaging has been more of a holistic approach when we're engaging in these different programs that basically aligns with the multiple verticals. So, at least on a regular basis within our portfolio, we do participate not only in regular meetings, both specifically in an ESG front, but also predicating on individual assets or asset classes and portfolios based on the business planning process. So a lot of the messaging tends to be articulated and delivered during those timeframes and processes. And if we can find synergy, across the multiple verticals for some of these programming, it tends to resonate pretty clearly across the board, because it tends to what I like to call kind of kill multiple birds with one stone, right?
Yeah, that makes a lot of sense. So, maybe not the specific kind of turning point or report you handed someone, but the fact that one, having top-down support certainly helps drive things, and having engaged leaders. But also the more integrated sustainability is with multiple elements of your organization, the easier it is to sort of pursue activities instead of, saying, hey, sustainability is over here. Let's not worry about that. That's not part of our business. Make it part of everyone's business, certainly supported. Yeah.
Yeah, and from a systematic approach, I mean, when we've put together some of our carbon neutrality roadmaps throughout the portfolio, we've incorporated a number of different sort of factors that tie into it, and that ties back to not only utility impacts, but fiscal impacts. It applies to carbon impacts. It indicates sort of overall infrastructure master planning at the individual asset level. We look at synergies across multiple properties and at the portfolio level. So, the individual programming and the messaging isn't necessarily done at an ad hoc level. It's sort of taking into account all the various factors that tie back to individual stakeholders within the firm.
Yeah, that makes sense. Certainly decarbonization involves energy efficiency and is a lot more complicated. So nowadays, as organizations are expanding into ESG and decarbonization and looking at a bunch of different factors, having a well-rounded program that's able to sort of absorb those challenges in multiple different areas is certainly helpful. But before we start going down the rabbit hole of decarbonization, I want to talk to Maddie a little bit and get her sense. So Maddie, with you, interested in your experience at Principal, where Principal came from, how the business case really fit into there, how senior management in particular was sort of convinced or motivated to pursue sustainability activities. Any thoughts on that?
Yeah, absolutely. For the most part, I'd say the messaging that resonates with senior management and internal stakeholders hasn't really changed a whole lot since the beginning, besides referencing updated studies. because we are seeing the benefits of sustainability are largely the same. Efficient operations continues to be a topic that always resonates, as it's really easy to draw the line from reducing energy and water use to property NOI and value. Many efficiency projects are also now fairly low cost or even some no cost with improved operational measures, showing some efficiency benefits. We do reference things like the Desire database or encourage our teams to do so to leverage any incentives that can help support those bigger projects. But really, efficiency is always something that resonates, and I don't see that changing. Sustainability features that represent a competitive advantage for properties and ultimately attract and retain tenants continues to be a point of resonance as well. Tenants still like efficient buildings. That continues to be a selling point, although I think it's more of an expectation than an above and beyond these days. We saw a big jump in demand for healthy buildings during COVID. So we're continuing to incorporate that in our strategy as well. And that has resonated really well internally as well. Another key point for our decision makers is, reducing risk exposure. So especially physical climate risk, regulatory compliance risk, reputational risk, any sort of proactive strategies we've presented for reducing those risks have been well received with our senior management. And then investors are continuing to show increasing interest in or demand for sustainable products and increasingly detailed reporting on our sustainability progress. So we always work to align our sustainability initiatives with those investor priorities and making sure we're communicating what those investor priorities are and how we're directly meeting them, as that always resonates really well with our decision makers.
Great. Yeah, thanks. So I'd like to shift a little bit. We've talked a little bit sort of the macro level, how your organization operates, but I want to get into the specific internal stakeholders and sort of what works there. But of course, there's a bunch of different types of internal stakeholders. So let's first sort of define sort of briefly the different groups that you consider your internal stakeholders, how they fit into your energy management program. Let's do that for both of you, and then we'll talk a little bit more about sort of messaging there and engagement. Maddie, do you want to continue and just give us a little bit of overview of your internal stakeholders, how they're involved?
Absolutely. So starting with our sustainability team, it includes our Director of Operations and Sustainability, a European Sustainability Manager, a Sustainability Data and Reporting Analyst, and myself. And then we work with a lot of groups of key internal stakeholders. So as our sustainability program has grown, the sustainability responsibilities across the organization have been incorporated within existing responsibilities. So starting with fund managers, they work really closely with us on the sustainability team to set fund goals in alignment with investor priorities. Those fund goals are expected to be met by all properties, or at least to support progress towards those goals. Fund managers are responsible for communicating the fund's ESG performance to investors, including progress towards targets and key initiatives, and approving major asset level projects and property budgets, including the annual sustainability budget. Next, asset managers are responsible for ensuring that properties support progress towards the fund's sustainability goals. So this includes a bunch of things such as ensuring property managers complete sustainability requirements accurately and on time, monitoring property sustainability performance, developing and implementing action plans and measuring the impact of those actions, incorporating green lease language into lease contracts, ensuring energy and green building certifications are earned and maintained without lapsing, and complying with all local or regional regulatory requirements, such as benchmarking an Energy Star portfolio manager and building performance standards. Property managers are technically external, but they're a really key part of our overall story, and we work with them as closely as internal stakeholders. So just at a really high level, wanted to share some of their responsibilities. That would be benchmarking utility data and Energy Star portfolio manager, monitoring the property's ESG performance, especially that energy, water, and waste, completing an annual sustainability survey so we can maintain an inventory of the initiatives completed, completing annual energy, water, and waste technical assessments to identify additional efficiency opportunities and low or no cost sustainability projects and getting those into their budgets, engaging with tenants, and coordinating with consultants or vendors for strategic projects. Our acquisitions team internally is another really important group of our internal stakeholders. They are responsible for assessing sustainability factors during due diligence when purchasing operational assets. This includes a climate risk assessment, an inventory of existing sustainability features, and a whole big list of other things. But really the key here is to gather the information needed so we can start developing an asset sustainability strategy right away. And then lastly, our architecture and engineering team plays a really big role. They have to ensure sustainability standards are incorporated in building design and renovation. They review sustainability risks that are assessed through the acquisitions process, like in the property condition assessment. They provide expertise on local sustainability best practices and recommend green building certifications. So representatives from all of these groups and more are part of our Sustainable Investing Working Group, which evolved from our original Green Working Group in 2007. But really, the message here is that it's important to us to have sustainability kind of across the organization, because as a team of 4 covering hundreds of assets, that's how we get things done.
Yeah, absolutely. The more attention that's paid to this, fortunately, that sometimes increases the complexity quite a bit and who needs to be involved. But it's a good challenge to have. Alex, how about you? Can you give us a little bit of an overview of what you consider sort of your key internal stakeholders that you work with on a regular basis?
Yeah, absolutely. I will say in comparable nature, the one differential, at least from an RXR's ESG and sustainability internal stakeholders, is that we have a dedicated ESG committee. So it's more of a horizontal based structure that's comprised of multiple, individuals from multiple verticals within the organization. There's 2 chairs for that ESG committee, one that's the head of property management and ESG, and another individual that is the head of sustainable investments from the investment management group. Within the actual committee, we have multiple stakeholders, so we're spanning across the verticals, inclusive but not limited to property management, development and construction, engineering, risk management, investment management, information technology, all the way up to the C-suite. So, the COO, et cetera. So the committee meets regularly and discusses various sustainability programming throughout the organization. We'll run through risk registers on a property level, on a portfolio level, that ties back to climate risks. Any acquisitions or due diligence processes will go into what some of those sort of due diligence analyses are from both a climate perspective and infrastructure perspective. From a development construction point of view, we'll run into building standards from a both infrastructure perspective, renewable opportunities, building materials, et cetera. So given that a lot of these verticals already interact with each other on a day-to-day basis, the ESG committee provides a sort of a unique sort of holistic synergy that allows us to run through a lot of these different topics in more of a cohesive manner, rather than trying to interact at an ad hoc means and methods throughout the portfolio.
Sure. Yeah, thank you both. So digging just a little bit deeper, obviously there's the potential for some complexities there. Lots of different groups involved. They each have different expertise. You're both Energy Star partners. You utilize Energy Star Portfolio Manager, other platforms to generate information that's worth sharing. So with all of these internal stakeholder groups, and actually you talked about this a little bit, so I'll go to Maddie next. How is that information flowing through? What types of information is being shared, either about energy efficiency, decarbonization, anything sort of on this topic? What are you sharing? How are you sharing it? Would be great to hear a little bit more. And I think you might have a slide that might assist here, right?
Yeah, for sure. So we do have a whole bunch of methods for internal communication. The one showing on the slide here has been really successful. We rolled this out at the beginning of this year, and it's an asset sustainability scorecard. So we take property data in Energy Star Portfolio Manager and export it using standard exports from Energy Star, and it feeds into this template automatically and then populates for each asset. So this is distributed to asset managers and included in their discussion packets for quarterly meetings between asset and fund managers, where they review each asset's financial performance. So it's a really natural add to add in some discussion of sustainability performance. On the scorecard, since it's small, I can just kind of talk you through what's on there. We have some information about each property's energy, water, and waste data current date, data coverage, performance since baseline, and any notes on performance. Plus, at the bottom there, it shows existing certifications and expiration dates. The right column has what the targeted amount is, so progress towards that target is easy to identify. And then each line item has that green, yellow, or red indicator. So each has a specific target to meet, and if they're meeting it, it's green. If it's within a certain range of being close, it's yellow, and then if it needs some additional focus, it will be red. For each of those as well, we have a supplemental file that shows for each line item, if it's green, yellow, or red, what that means, and then what action needs to be taken or questions to be asked. So, for example, if the energy or emissions data coverage were to be red, the asset manager could go to that line on the file and understand what data coverage means, and then maybe what questions to ask their property manager to remediate that. So this has been really helpful in terms of giving asset managers specific feedback on sustainability and their responsibilities. Again, they're responsible for reviewing this quarterly, discussing any red indicators with their property managers so they understand what's going on, and then being prepared to talk about that with fund managers at quarterly meetings. And then the other thing is they have to identify one sustainability priority, which they fill in that top box each quarter, and then show progress towards that quarter over quarter. So fund managers will ask about it. A couple of the outcomes we've seen just in the couple of quarters we've had this so far is we've seen significant uptick in asset manager engagement on resolving any property data collection or accuracy concerns because it's really clear where there's issues. It's given our property and asset managers just a better understanding of their property's performance compared to our specific targets. Again, helping with prioritization and accountability. And then it has given a lot of recognition to our high performing properties. So this property, as an example, is one of our top performers. There's a lot of red in certifications, which we've changed to now be gray because obviously we don't need 10 certifications at a property. But it's been great for fund managers to see this and say, hey, look, you're doing a great job. Thanks so much. So that has been really successful. We continue to refine, but this is just something we created in Excel. So it's been a big win in terms of internal communication. A couple other just kind of high level that I wanted to share about. We do have a broader formal quarterly reporting process that aggregates energy, water, and waste data from Energy Star Portfolio Manager at a fund level. And then our data and reporting analyst takes this and does a one-page report showing portfolio progress towards targets and just highlighting key initiatives underway and key accomplishments. This goes to our entire Principal Real Estate organization and then sustainability teams within our broader Principal Asset Management and Principal Financial group. And then we also have found a lot of success in doing targeted webinars through the year. So we'll do one annual update for all staff that covers sustainability trends, progress towards goals, and updates on strategic projects. This is really kind of the sustainability need to know. So if you encounter an investor or a peer out at an event, what kind of things you need to be prepared to maybe talk about. And then we do a quarterly webinar that's really targeted, one for asset managers, one for property managers, and that is specific to just upcoming action items and deadlines. So we tell them what those are, some context connecting it back to our goal and our investor needs, and then any resources that are going to support them in completing that. We found that we get a lot of engagement and attendance when we keep those to just 30 minutes. So it's really quick, but it's really functional in terms of here's your actions, here's your resources. So those are a couple we've found a lot of success with.
Great, thanks so much. I appreciate you sharing this. Everyone loves a good spreadsheet, tracking spreadsheet. Thank you for choosing one that has Energy Star certification. Love to see that. Shameless plug. Deadline for certification this year is December 13th.
We love Energy Star certification.
Thanks. I also thought it was interesting, one of the last things you said on sort of the information you need to know. There's lots of metrics and lots of pieces of information you can present. Figuring out what to present based on the audience, I think, is super important. Alex, I know you covered a little bit, and last time you spoke about how your internal or groups are set up and how you communicate. I don't know if there's anything else you wanted to add in terms of the types of information, maybe kind of go off of Maddie said in terms of like, what information do people need to know to help them make decisions? Or, feel free to pass if you think I've already covered it.
Yeah, absolutely. So, we kind of take a look at this in two different ways. One is more in terms of existing circumstances and what existing conditions are at the property level and at the portfolio level. We incorporate not only on-site energy management, but also real-time energy management software throughout our portfolio. So depending on the stakeholder, so at least for our operators and on the engineering side and the property management side, we have a real-time view in terms of how these properties are actually performing. And then as sort of time aggregates, some of that data ultimately funnels into Energy Star Portfolio Manager. A lot of our senior management tends to appreciate a lot of the numerical scoring that Energy Star Portfolio Manager provides. It provides a nice little sort of benchmarking across the board to see how our portfolio is doing at an individual property level year after year. And obviously the means and methods to try to get Energy Star certifications, LEED certifications, etc. So at least from an existing the circumstance and an existing condition perspective, depending on the shareholder, we get as granular as sort of real-time energy management all the way up to sort of a larger form factor for data analyses. And then as far as sort of future energy efficiency and decarbonization programming, the carbon neutrality roadmaps that we've created for all the individual properties, a lot of that information gets ultimately incorporated along with some of our certification information and year over year metrics to provide a more holistic viewpoint of what future business planning, whether it be on a capital side or an operational side, how those programmings align over the next 1 year, 3 years, 5 years, 10 years. And we can really put together some interesting efficiencies and aligning that with some of our business as usual programming or end of life projects that we might have already done to get sort of an increased efficiency of implementing these sort of programs.
Thanks. So lots of great information from both of you on internal stakeholders, communication methods, what you're sharing, why you're sharing it, sort of how the operation flows. I do want to check and see if you had some insight into what happens when there's roadblocks. Everyone runs into challenges. We say each building is a snowflake, lots of unique things that can go wrong, even if you have a very strong program that sort of guides what you're doing. So whether it's a specific example or a type of example of internal roadblock, I was wondering if each of you could speak to sort of what happens when you run into those obstacles, what are the best ways to deal with them sort of internally. Maddie, would you be able to first?
Yeah, so when encountering internal roadblocks, I think the really important first step is to understand the context behind the pushback. So I like to meet one-on-one with whoever's putting up the roadblock to understand their perspective, really with the intent just to collaborate on identifying challenges and hearing their concerns. A lot of times I'm finding roadblocks are coming down to competing priorities. Everyone already has a full plate. We have limited budget for properties. Unfortunately, they're not unlimited. Time constraints, lack of expertise. So these are just really important to understand and address kind of upfront, so we have a better implementation process and outcome. Once understanding the concerns, working to address them in our implementation plan, making sure that those concerns are communicated back to whoever put up the roadblock, so they understand that their input is valuable and that we did address it. Another key component, I think, to communicating sustainability program implementation is how the project connects back to our shared goal across the organization, which is meeting investor needs. So we'll share if investors have requested a type of project specifically or how a project supports specific investor goals. And we'll include any other information about additional value or benefits, both sustainability and financial. And that also always helps kind of move through some roadblocks. So an example, several years ago, we were to incorporate climate risk analysis into our standard acquisitions and development process. So we'd identified this as an increasingly important factor for investors. We were spending a lot of time in our meetings with investors talking about climate risks and how do we contextualize them and mitigate them. We're getting requested for a lot of data on climate risks in RFPs and DDQs. So while we were working through identifying a vendor, we also were meeting one-on-one with key stakeholders to identify, what are their questions or concerns. So this included acquisitions managers who run the due diligence process. So a key concern of theirs was, what do we do once we identify a physical risk, and how does that impact our insurance rates? So we ended up meeting with our internal insurance team and discussing with a lot of peers, and then going back with that information and sharing that with the acquisitions managers to collaborate on strategies. The acquisitions analysts are responsible for incorporating any risks identified during due diligence into underwriting and then investment committee memos. So their concern was really, how do we add additional analysis into an already really compressed and pretty frantic timeline of getting due diligence done? So we worked with them to develop standard language and implementation guidelines that allow for it to be really pretty straightforward, and something that they were able to incorporate quite easily. And then asset managers are responsible for addressing the identified risks once we own the property. So their key concern was, they don't have climate risk degrees. And so how do we know what to do to mitigate specific risks that are identified? Because obviously we don't want to identify a risk and then do nothing. So we developed a process through acquisitions where engineers are involved to help review property condition assessment consultant reports and doing anything upfront, but then also a climate risk prescription resource for each hazard specifically. So that serves as a starting point for, what resources do I have and what are sort of the standard best practices for this specific risk so I can develop a plan. So by identifying these concerns upfront, I really think we were able to implement a better process. They brought up a lot of great questions. So we've been talking about insurance impacts for years. And now it's something that we're talking about a lot in the industry as well. So it was great to kind of be on the forefront of that. And then we had really little pushback when it came to actually implementing the process in acquisitions and development. And it has been able to be just a standard part of our process really since the beginning. So I think it was definitely a success story.
Great, thanks. A lot of great examples there. I'm going to attempt to sort of summarize just for the audience. So it sounds like some key principles in it. Clarity around issues, offering transparency on what's going on, specifically on acquisitions, addressing issues and questions and challenges essentially before they happen, when people have the questions and haven't run into, mounts of paperwork they got to figure out. And then, if all else fails, the investors, the customers are asking for it, so we got to do it. Great, thanks so much. Alex, on your end, do you run into the same types of situations? Is it more typically a financial constraint? Is it a bunch of different things that can happen? Do you sort of take the same approach as principal? Do you have any different other thoughts to share on how you guys deal with roadblocks?
Yeah, I think a lot of the roadblocks that everyone encounters seems to be uniform and universal across the board, right? There's definitely, especially in today's market, I think there's definitely fiscal constraints that you'll see across the board. I think there's also logistical constraints as well too. And sort of tying back to your previous question, even in terms of what information is being shared, part of our analyses even goes into how the grid is, right, and what the redundancy and resiliency of energy sources looks like, right, in individual geographic regions that we occupy. So sometimes the roadblocks, they might seem to be internal, but some of the roadblocks tend to be external roadblocks as well that we need to ultimately account for. I think the two key principles, at least on my end specifically, that we tend to focus on is really just empathy and adaptability, right? Sort of aligning with what Madeline was saying is really understanding the root cause of the roadblocks, you know, and you really understanding the individual stakeholders and why those roadblocks exist, and sort of the catalyst for what those roadblocks are kind of provides an opportunity to allow for executing particular strategies that may, you know, basically accommodate, you know, and maybe even help solve a potential roadblock in and of itself, right? But from an adaptability perspective, you know, sometimes it requires some of the programming and the sustainability strategies to ultimately adapt as well too, right? Sometimes, you know, you might have to, what you might consider one single deployment of a particular initiative, you might have to be a little more creative and do it more on a phased approach, right? Or figure out different timings for what that approach might look like. You know, some roadblocks are just not, you know, bypassable in a sense, right? But I think really understanding and having empathy for the stakeholders and what the individual circumstance of what those roadblocks lend itself to, allow for an opportunity for collaborative sort of work sessions to be able to deliver a more holistic resolution to what those roadblocks might be.
Great, thanks. So sort of sounds like there's sort of two sides to it. One, you know, we're talking specifically in the context of real estate and energy management and different projects. So there's the project component. If it's, you know, related to something technical, you know, something financial, there may be some juggling to figure out how you can eventually accomplish it. Maybe projects are delayed, maybe you approach it a different way. But then in the end, a lot of it's just very human, right? You know, you're dealing with different stakeholders. They have different needs. They have different values. As any salesman or any person psychology field would say, like, you got to understand the motivators. You got to understand the need. Being empathetic on this helps you come up to, you know, a solution for everyone. So a lot of sort of general good takeaways there. So I have one, maybe two more questions, but we did get some in from the audience. So if you have questions in the audience and you haven't asked it, please submit it now, and I will try to cover it if I can. My last question, is going to be a little shift from the internal. Alex, you kind of mentioned this a little bit on sometimes external is the issue. There are a lot of external stakeholders. We could talk about investors and some others. I think tenants is something that people really are interested in terms of like someone you have to convince to do something that isn't part of your organization. So I was wondering if each of you could share, if you have some advice for engaging with tenants. You know, they're internal to the building and they're critical for you to get your sort of goals met. So any tips on engaging tenants, you know, in your energy management program that you have? Maddie, any thoughts?
Yeah, I think it's really similar to a lot of what Alex has been saying as well, you know, connecting back to their goals and having empathy for what's on their plate. We do seek to establish the importance of sustainability upfront with tenants. So we incorporate green lease language in their contracts upfront. It includes, you know, really a lot of things, including just, you know, we'll collaborate together on sustainability progress. Also, can we please have your data? So trying to set expectations up front. We have a lot of resources. Our property managers do a lot of our tenant engagement because that's who the tenants know. And so we have a tenant and community engagement resource template. And so that kind of guides property managers through identifying sort of the local issues in terms of utility data collection. How can we make that as easy as possible for tenants? Here's what we need from you, that kind of thing. Guides them on looking up the tenants in terms of what corporate sustainability goals do they maybe have. So can we connect tenant outcomes and goals to ours and collaborate to meet those? Because a lot of times they are really similar. So I think those have been really helpful. And then we have just different outreach letters. So trying to help explain to tenants, you know, what are we doing with your data and why is it important and how can we help use it to help, you in terms of reducing your cost, improving efficiency, making your life easier. So this has been a lot of the resources we've found.
Great, thanks, Maddie. Yeah, all that great. Alex, similar experience? I mean, and I know tenants could represent office tenants, multifamily tenants, very different types of audiences, but
Yeah.
you know, anything you could share from a engagement standpoint, either you know, getting tenants on board with what you're trying to do and how to convince them, or you may have tenants that, you know, corporate tenants or something that have their own goals, and it's more about aligning those goals. I don't know if you have any additional thoughts that you want to share on that.
Yeah, I mean, from a tenancy perspective, you know, our approach is a bit holistic in the sense that it starts prior to even the tenant being onboarded and within the property, right? It starts sort of during the leasing process, and being able to really engage with tenants during the leasing process, and providing insight into some of our sustainability goals and initiatives, and sort of understanding what their sustainability goals and initiatives are, and being able to kind of piece together the appropriate requirements and language and sort of engagement during a leasing process, so that by the time the tenants are already within the properties and engaged in operating, you know, a lot of some of those core baselines and benchmarks are already being accounted for, right? And have already been discussed. I think a lot of times, you know, when tenants are already in the building, you know, their infrastructure is already in place, right? It tends to be a bit difficult to incorporate some of these initiatives after the fact. So being able to kind of have these discussions early on in the process and really integrating with them, I think, has been really valuable for both sets of parties. You know, we have what's unique in RXR is that, at least on the commercial side, actually even on the multifamily side, we have an entire department that's primarily and holistically dedicated to the tenant experience. And this department holistically really gets into trying to engage with all the tenants on a regular basis, but also provides programming to the tenants, both sustainability related and non-sustainability related. Just the other day in one of our properties, we had an entire sort of midday event that was dedicated to Energy Star and sort of Energy Star awareness and tenant space awareness, just so they can understand that these programs do exist. And you tend to see multiple sort of types of tenants. Some of them are highly sophisticated and educated in terms of a lot of these sustainability initiatives, and have their own programmings in place, and sort of integrating with some of their ESG folks and sort of their appropriate stakeholders tends to be a seamless integrated process, right? And you know, there are some tenants where you know, our value add to those tenants ultimately ends up being educating them on some of this programming and being able to provide to them what is available and what can be done, and what the industry is showing, and sort of how that ultimately integrates with not only some of the municipal requirements within those particular regions, but also what sort of organizational and best-in-class requirements might look like, you know, at least overall. So, and this applies not only to just tenants as well, too. We've noticed that, you know, we've had comparable sort of conversations with investors, municipalities, utility companies, and even public organizations that integrate with all these other external stakeholders as well. So I've noticed that there's been sort of an overall the openness for these synergies across the board.
Yeah, great. Thank you for that insight. Seems like you have a lot focused on those types of approaches. So appreciate you answering my questions. We've got a few from the audience, about 5 minutes left. So I am going to ask a few questions that have come in. Again, if anyone has them, we only have a few minutes left, but feel free to submit them in the chat. One sort of very specific question, but very on point in terms of where we are right now. Inflation Reduction Act. any thoughts on accessing Inflation Reduction Act funding, incentives for capital projects for energy usage? I don't know if either of you have experience with specific projects, but any thoughts generally on how you approach sort of a major piece of legislation and digesting all the stuff coming out? Alex, I know we talked before. You had a little bit of thoughts on the philosophy here. I was wondering if you could address that.
Yes, absolutely. I mean, there's a number of initiatives where we've looked into the IRA as a means and methods for implementation. One of our current developments is actually going to be utilizing the IRA from a geothermal perspective. I think the key component to not just the IRA, but any incentivization programming is to really understand, a lot of these tend to be not one size fits all. So when we do our analyses from any energy efficiency measure, any of our programming, we tend to look into from a fiscal impact perspective, what the gross impacts might look like, what any incentive impacts would look like, and then what any sort of I consider the IRA sort of because it is a tax credit. It's not necessarily an incentive. So, we kind of split them into individual buckets, and it becomes sort of additive in nature, right? So it provides, this stakeholders, other internal stakeholders, that flexibility and visibility into what the ultimate impacts would look like, and sort of hedge risk predicated on each of those programming. So at least from a fiscal perspective, it provides an overall granularity of what those impacts could look like. We also account for what that would look like from a scheduling perspective too, because a lot of these programmings require additional sort of cost segregation studies and due diligence analyses and sort of energy modeling analyses that might add basically fiscal impact to a particular project, or scheduling impact to a project. So we tend to identify what those overall impacts are for the programming, and again, assuming that it doesn't incorporate any additional roadblocks and it is a feasible scenario, we've been open to try to lean into those sort of programmings and really utilize them to max capacity.
Great, thanks. And that was a great overview. I understand the IRA is a very complicated and large thing. So some of it may be applicable, some of it's not, some of it, some of the money is still moving out there, property dependent. So definitely depends on the context of what part of the IRA we're talking about. Maddie, I don't know if you have anything to add, or if you want to move on. Probably have time for one more question here.
No, I think that was a great overview from Alex. We can move on.
Okay, great. So the final question I want to ask, it came in as how to convey the need for immediate action, but I think it speaks to the sense of urgency, sort of now more than ever, as new sort of either motivators or potential penalties or drawbacks or risks are coming up now. Any closing thoughts on kind of where we are right now in our country, and with climate crisis and 2030 goals, 2040 goals, 2050 goals, and a lot of signals saying that we may not be on track to meet things? From your perspective and your organizations, how are you going about conveying a sense of urgency to your stakeholders, whether internal, whether external? Any specific tips on how to start now, and instead of sort of waiting for the future for other things to fall? Maddie, any thoughts on that?
Yeah, I think the key is really just communicating that, there's some long lead time on some of these things, and breaking things down to kind of to the current day. So some of these targets feel a long way out, even, 2030 being 6 years, especially given property and asset managers who have a lot of priorities for the next day, the next week, the next year. So I think breaking things down to have sort of a shorter lead time, and then contextualizing actions needed in terms of that current or near-term impact. When referring to like our net zero target internally, I usually refer more to investor demands for showing year-over-year progress towards emissions reduction, instead of, hey, we need to be at net zero by 2050. It's the same outcome, but the time frame's more relevant. Similarly, sometimes projects, for like building performance standards, we maybe need to meet a level of performance by 2027. So it seems like, okay, I have a couple of years still, but we need to get projects identified essentially now so we can get them budgeted in 2025, get them implemented in 2025, and be effective by 2026 for that measurement date. So I think, again, just kind of giving that context to timeline for implementation, especially to groups who might not be spending all their time here and realize that we need that much lead time.
Great. We are 1 minute over. Alex, I don't know if you have any closing thoughts on that topic before I wrap this up. Any other thoughts you get?
No, just real quick, to your point, I think being proactive with the communications, I think is really, really important. It's critical in sort of identifying items, from a future proofing perspective and being able to time things appropriately, utilizing sort of risk management, risk registers to be able to identify sort of likelihoods and timelines. Business planning and incorporating some of that road mapping during your business planning processes on the 1 year, 3 year, 5 year, 10 year, 10+ year horizons, and some of the factors that are required in order to sort of make those decisions, I think are really critical. Because a lot of times, a lot of decision makers, generally want to know like what's the catalyst that's going to require that decision to be made or not made, right? And I think being able to identify those in an articulate manner and in a clear, concise manner, I think is really valuable.
Great. Yes, thank you. Very well said. We're at time. Thank you guys so much. Thank you for everyone who attended. Appreciate the valuable and lengthy conversation. Probably need a water break, but thank you so much. And look forward to talking to you in the future.
Thank you.
Thank you, everyone.
Thanks.